Four major headlines have shaken Japan's digital asset landscape. Bybit has paused all new user registrations in Japan. SBI and leading banks are propelling 24/7 tokenized stock trading. A key Web3 policymaker has taken on one of the most powerful roles in the ruling party. And MetaPlanet, Japan's Bitcoin Treasury company, just announced a 750 billion Japanese yen share buyback funded by Bitcoin-backed loans. Each of these stories signals something bigger. Japan's digital asset market is maturing fast, balancing relative discipline with technological ambition. Let's unpack what it all means. Welcome to Japan Digital Asset Weekly, episode 60. I'm Keisuke, CEO of Wakyodo and venture partner at Onigiri Capital, a blockchain-focused VC fund. On October 30, Bybit, the world's second largest crypto exchange, announced it would suspend new account registrations for Japanese residents starting October 31st. The exchange said the move was part of its ongoing efforts to ensure full compliance with Japanese regulations. Existing users can still trade for now, but Bybit plans to concentrate resources on aligning with Financial Services Agency requirements. This is not the first time Bybit has faced regulatory friction in Japan. The FSA has issued a warning 3 times since 2021 for operating without registration. As Japan moves toward the fully licensed crypto market, the pressure on unregistered platforms is mounting. Some observers speculate that Bybit may follow the path of Binance and Gate.io by acquiring a licensed domestic exchange to re-enter legally. But for now, that remains unclear. What's certain is that Japan is tightening its standards, and compliance is becoming the price of admission for global players. Meanwhile, Japan's financial institutions are building the next generation of capital markets. On November 3rd, SBI Holdings and other major securities and trust banks reportedly plan to launch a system for trading tokenized listed stocks by 2026, allowing investors to trade from as little as 1 Japanese yen anytime 24/7. The initiative is being coordinated through the Digital Asset Co-Creation Consortium led by Progmat, Japan's leading digital asset platform provider. A new tokenized stock working group will be formed to design the infrastructure for fractionalized, blockchain-based equity trading. If successful, this will remove long-standing barriers like the 100 share minimum lot and make Japanese liquidity accessible to a wider base of investors. It also aligns with Japan's national policy of shifting from savings to investment. According to Chainalysis, Japan's on-chain inflows grew 120% year-on-year through June 2025, boosted by regulatory clarity, tax reform debates, and the first approvals of yen-denominated stablecoins. Now the question is whether Progmat will continue to lead Japan's RW infrastructure, or whether global players like Securities and PointsVilla, backed by Baylor Capital and joined by Onigiri Capital in its Series A, will influence Japan's direction from abroad. Either way, the next 2 to 3 years will be decisive for Japan's tokenization ecosystem. On October 29th, Masaaki Taira, one of Japan's most influential Web3 advocates, announced new appointments within the Liberal Democratic Party. Taira previously led the LDP Web3 project team that produced the landmark policy whitepaper guiding Japan's tax and regulatory reforms. His new role secured continuity for Web3 policy under the new Takaichi administration, ensuring that the industry retains a trusted voice at the center of Japan's digital strategy. For builders and investors alike, this is a positive signal that Japan's Web3 agenda will remain a national level priority through 2026 and beyond. On October 28th, MetaPlanet, the Japanese listed company leading Bitcoin Treasury adoption, announced a massive share buyback program worth up to 75 billion Japanese yen, roughly 30% of its outstanding stock. The program will run for a year and be financed in part by a new $500 million credit facility secured with Bitcoin collateral. MetaPlanet currently holds over 30,000 BTC, making it Asia's largest corporate Bitcoin holder and the world's 4th largest of all. Its goal is staggering, 210,000 BTC by 2027. The company argues that its market value has underrated its true economic worth as its market cap recently fell below the valuation of its Bitcoin holdings. By repurchasing shares and increasing BTC exposure, MetaPlanet seeks to boost capital efficiency and maximize its BTC yield per share. But this is a high-risk strategy. A sharp Bitcoin price drop could force collateral liquidations and trigger market panic, especially since MetaPlanet is widely held through Japan's NISA investment accounts, a government-sponsored tax-exempt program similar to the UK's ISA or the US Roth IRA, designed to encourage retail participation in long-term investing. At Wakyodo, we acknowledge that DIT-style companies like MetaPlanet help raise public awareness of digital assets, but we urge a disciplined approach to treasury management. Leverage against volatile assets demands prudence, not momentum. If this market were to turn sour, the fallout fallout could damage both investors and the reputation of crypto in Japan. From Bybit's compliance push to SBI's tokenization push, from Taira's return to the policy frontline to MetaPlanet's Bitcoin-backed buyback, Japan's digital asset narrative is shifting from speculation to structure, from reaction to strategy. That's all for this week's Japan Digital Asset Weekly. If you found this episode helpful, please like, subscribe, and share. At Wakyodo, we support global digital asset businesses in entering Japan's regulatory and institutional landscape, from market research to business development. Thanks for watching, and see you next Monday.